Welcome back to our Outlook 2025 series. The Reserve Bank has just cut its GDP forecast for the fourth quarter to 6.5% from 7.2%. That came in the December bulletin. But how are economists taking this revision, and how do they see calendar 2025 and FY26? Joining me are two economists, Devendra Kumar Pant, the chief economist at India Ratings and Research, and Aditi Nair, the chief economist at ICRA. Aditi, Mr. Pant, thank you very much indeed for joining us. Well, Dr. Pant, let me start with you. I read up your report, and you are expecting the Indian economy to grow at just 6.6% in FY26 as well. Would there not be some cheer from the fact that we have a good harvest and there is going to be some, at least, liquidity loosening by the Reserve Bank? Won't all this mean better times for FY26?
Well, Lata, I hope I am in the same camp as you are. As of now, how the situation is, look, liquidity impacts people at the top end of the spectrum. Now, what we are concerned with, earlier we were concerned with the rural demand. Now we are concerned with the urban demand. Until unless inflation comes down and stays at around, say, 4.5%, more than the liquidity, which will have an impact, the overall inflation decline will have a larger impact on the consumption, and so to say on the overall demand in the economy. We don't know how the monsoon is going to pan out in 2025. As of now, like Aditi or any other forecaster, everybody assumes with a normal rainfall, and it's only around June or so we have more idea about how the rainfall is taking place. We don't know how the weather pattern is going to evolve during this February and March. Will it be heat, more hotter condition compared to normal? Will there be excess rain? Will there be hailstorm? So that we are so hopeful about the good Rabi forecast after the output. If that doesn't happen, then even 6.6 will be a problem. Moreover, how from 20th January 2025 the entire landscape is going to change. Will there be a tariff war? There will be tariff increase. Now, how the commodities are going to behave? Whether how the capital flight will inflows, or whether there will be positive inflows, or whether there will be capital flight. So there are so many unknowns. So based on that, we have looked at 6.6, but any of these 3-4 things which I mentioned, if that materializes, then I'm afraid there could be a downward revision. But what government can do, that is a big challenge. And when we talk about government, we generally focus or fixated about the union government. We have to go and look at what each state governments are doing.
Fair enough.
Because if we talk about government capex, union government capex, 11,11,100 crore. A large part of his defense capex. That does not create much demand in the economy. So we have to see those things, how they are going to pan out in next year. And based on that, there may be a revision. Which way? As of now, we can't say.
Yeah, I read your report. You did say that gross fixed, government expenditure as well as private expenditure is likely to remain muted in FY26 as well. But Aditi, Dr. Pant has clearly raised the issue of consumption, of inflation bringing down consumption. That naturally focuses on what you expect from the Reserve Bank in calendar 2025. After reading the bulletin, did you get a feel that a February cut is on the cards? What is the cutting cycle at all? Is it 25, 50, 75?
Lata, if I may just add a couple of points to what Dr. Pant just said. I think one of the reasons why we're a little more hopeful of rural sentiment remaining a little more sustainably intact in the coming year is that the reservoir levels are actually quite good in most regions. And this is something that takes away a lot of the uncertainty related to particularly things like the onset of the monsoon rainfall and how that pans out in the first month or two. So as you know, July is the main month for sowing. And when reservoir levels are quite healthy, then at least we are less concerned about how exactly when the monsoon onset is and how the first 5 to 6 weeks look. So that's one positive. Second is a kind of odd thing that I'm going to say. We are now becoming more apprehensive of a larger shortfall in capital spending this year from the government of India as compared to that 11 trillion budget that Dr. Pant just mentioned. And that would probably give us higher headroom to show a slightly, a kind of mid or double digit growth in FY26 while remaining within the likely fiscal contours. We do think that the government will try and target a 4.5% fiscal deficit to GDP ratio. And with a smaller capex becoming more and more likely with every month of data that we're getting from the government of India, there would actually be higher headroom to grow next year. So that's a positive. But global risks abound. I mean, this is certainly one year where we're very clear that we're looking at a lot of global uncertainty and global risks. And that is something that is going to add a very wide range around baselines for all economists. Now, coming to the RBI, my sense is that it's really going to be the December CPI data point, which is going to be very, very important, which is going to dictate whether the MPC can move ahead, a kind of new look MPC in a sense, can move ahead with a Feb rate cut. Other than that, in terms of the cycle itself, we still think it's going to be a very shallow cycle, 50 basis points spread over two policies.
Okay. All right. Let me just correct what I said about Dr. Pant. The government final consumption expenditure is expected to be only 4.3, but they are expecting personal consumption to improve to 6.9% in FY26. Where will this improvement come from? Will it be urban, Dr. Pant?
Well, if it is, if the inflation pans out the way we are looking at, and our estimate is for this year 4.9, and next year it is likely to be 4.3%, then we will see that likely to see across the board. It can come both from the rural as well as urban. But for rural to happen or to consumption to grow, the 2025 monsoon is very critical. Not only overall, it's spread over space and over time. That will become very critical. If that happens, then I think both rural and urban will contribute compared to the 2024 or FY25.
Yeah. No, I take your point that, as economists and, of course, data journalists, we should start factoring in the climate impact. After all, what took away from the second quarter growth was this extra rains in August and the terrible summer that we had. So climate impinging and taking away growth is going to be an important, probably vertical in economics, which is as yet underdeveloped across the world. But Aditi, should we expect something from the budget? Reform orientation? After all, one meeting with economists is over, both with the Prime Minister himself and the Finance Minister. What would your best guesses be?
Lata, my best sense for this budget is that, what I'm really looking forward to is the unveiling of the new medium-term fiscal consolidation plan. As we all know, for this year, the government is targeting a fiscal deficit of 4.9% of GDP, and we expect it to be mildly undershot because of a shortfall in capital expenditure. For next year, the medium-term target was to get to 4.5% of GDP or below, and we expect it to be right around that level in terms of the budget estimate itself that the government puts out. But then we need to look at the fresh medium term, the next 5 years. What exactly is the government targeting? They've indicated that they want to move away from a fiscal deficit target to a debt to GDP target. So what are the contours of that going to look like? And again, coming back to what you were just saying, how are we going to build in, the new set of challenges that the government needs to address over the medium term? Climate risk is certainly one, transition risk, and the new Finance Commission. We will get the recommendations later on in the year after the budget. That again, how will that get factored into the medium-term fiscal consolidation plan? So some, narrative around these items, I would really be looking forward to in the budget. In addition to, looking at the overall fiscal math for this year itself.
Okay. Dr. Pant, how would you draw the external, situation? It's a lot of guesses now, but we are getting hand over fist orders in terms of EMS. We are becoming beneficiaries of supply chain to some extent. will that be a positive in terms of driving both private investment as well as consumption?
Look, Lata, looking at the size of trade in Indian economy or overall size in the global trade, India is still a small country, and it's a price taker. It's not
That's what I meant.
price setter. Yes, there will be some improvement. There will be some. We may get some benefit. Depends upon how we are able to take advantage of what is happening in our neighborhood, Bangladesh. Something on the textiles. We were not able to take full advantage of China plus one. So PLI has been successful in certain sectors. Now, global supply chain, are we part of it? Unfortunately, I will say we are not to the extent we should have. We should have been.
Yeah.
So these are these challenges. External, as of now, if I look, we are on a stronger position, but how it is going to evolve post Trump in the Trump era, whether the tariff, which war or tariff increase, will it be just across the board? If it is across the board, we will be insulated. But if it is Indian exports or Indian commodities which are coming from India, they are targeted. Yes, we will be hit.
Thanks a lot for giving us your idea, Aditi and Dr. Devendra Pant, in terms of Outlook 2025. That's it on this year-ender special. Thanks much for joining us.